इन्वेस्टिंग ना एक रिच आदमी का काम हो गया है. दे डोंट अंडरस्टैंड और दे हैव नॉट बीन टॉट द कॉन्सेप्ट ऑफ कंपाउंडिंग. लाइक आप फुटबॉल ट्रेनिंग कर रहे हो, क्रिकेट ट्रेनिंग कर रहे हो, तो यू कैन एक्सप्लेन टू देम इन अ वे कि यार आप धीरे धीरे प्रैक्टिस करोगे तो ही बेटर होगे. आपका प्रैक्टिस कंपाउंड हो रहा है ताकि आप बड़े प्लेयर बन सको. बट ये जो नॉलेज होगा ना, इवन इफ ही फेल्स एज अ क्रिकेटर और फेल्स एज अ फुटबॉलर, ही विल नेवर फेल इन लाइफ बिकॉज हिज पोर्टफोलियो, इफ योर चाइल्ड स्टार्ट्स एट 12-13 अ पोर्टफोलियो, ही डजंट टच इट टिल द एज ऑफ 50, वो करियर में पूरा का पूरा फेल भी हो जाए ना, he will be a big winner in life. He will be ahead of everyone else. To get to invest today at startup could be the giants in the next 10 years or 15 years.
Suppose if someone's interested in investing in a startup, how do you facilitate that?
2 crores net worth is needed for a client who wants to do startup investing. 50% return on capital is the best business. A 30% return on capital married with a low valuation could be a better business, better stock.
So how do you manage your risk while being concentrated?
When they reach 16 companies, the non-market risk reduced by 96%. Any further addition to your portfolio beyond 16 is not really reducing risk anymore. Now you are killing your alpha, potential alpha.
What is the role of AI in wealth management?
A lot of disruption will happen. I mean, unimaginable disruptions. You could probably not even need education, because you will probably have AI inbuilt in your brain in some way, where let's say we're having a discussion and I want to talk in Spanish, we'll translate, I'm talking in Spanish to you.
Hi Neel, welcome to Walk the Talk with Sourabh Sisodiya. Looking forward to have a fun and insightful conversation with you today.
And thank you for inviting me. I know you had a great list of big time speakers, so for you to think of me in their stead, it's great for me. Looking forward.
No, so you were saying that I'm thinking of you because you are one of India's top fund manager. I personally admire you. So I want to know that your journey has been phenomenal. आपने काफ़ी अच्छी performance दी है for you. You made a lot of money for your investors. But I want to know, how did this journey start? ये नील की ये journey कैसे start हुई?
So I mean, you put too big a word like top, India's top, and it's not. We, by God's grace, we have done good. In our respective categories, the funds have done very well. We've topped in many timelines, but I don't look at it that way. I'm just a follower. I'm still learning. So yeah, so that with that caveat, so journey has been pretty interesting for me. Luckily, very very luckily, I started very early. So I started at 15, and when you start so early, you have all the time in the world to make mistakes, because I made a lot of mistakes. And very very soon into my journey, I was trading, and I also luckily ended up doing a couple of IPOs. The IPOs were of Petronet, LNG, and Yes Bank. And as a child, 15 or 16 years old, when you end up making a decent amount of money on a couple of IPOs like that, you get hooked on, and I got hooked on, and there was no looking back. I went to SP Jain. I think I was 21 or so, and I started the company whilst being in SP Jain, and about 8 years or so, we went for the SEBI PMS license, and from there we took startup license for a Cat 1 AIF. Then we took one more license about 18 months ago for the Cat 3 AIF, and luckily enough, again I say God's grace, that the funds have performed well, and the AUM has now grown to all across all of the funds. The AUM is now about 2,400 crores, and growing decently.
Amazing, Neil. Managing 2,400 crores is not an easy task. I know that your core focus is on special situations. So if you can just walk around ki, how do you identify those opportunities and how is the entire process?
So you see, so special situation is a very very niche or a very modern take, or I can also say it's a very specialist way of investing. It's not your usual ki, I think interest rates are X, so these stocks will do good. It's not like that. It's not just based on my feeling that this company will do good, so I'm buying the share. It's around announcements where a company wants to do value unlocking, right? So special situations are corporate actions that enable a company to unlock value in certain assets. So we've been very focused on special situations, and if you ask me, it's worked well for us in theory. When company does special situations, let's say a demerger, there may be a company which will have a family run business which will have, let's say, two different segments. One will be a good segment, let's say an IT business, and let's say all the peer group of that very similar profile business trade between 25 and 30 times earnings. And you may have this company which is also good, but somewhere down the line somebody in the family decided to start some commodity business which requires a lot of capex, large plants, debt, low return on capital, complete opposite of a IT business. So when a investor like you and me want to buy this company, we have to value the IT business, yes, but we also have to value the bad component over there. So we give it a net value, let's say 12, 15 times earning, which is far lower than what the peer group of the IT business gets. So when these promoters then decide to unlock value, suddenly overnight when the commodity business goes out, then you and I will look at it when the next quarter's earnings will come. I say, oh wow, the ratios are back to 30 times return on capital, 35 times, debt is gone, free cash flows are coming back to shareholders. So why should this company now trade at 12 to 15 times earnings? It should ideally trade with the peer group 25, 30 times. So this is how extreme amounts of value can get unlocked via demergers. There are delistings, there are change in promoter, there's also reverse merger. So a lot of things that constitute a special situation, and we've kind of made it our holy grail. We completely focus on it, and what we do is we are completely aligned. So any day, like if today there were two companies decide I'm going to spin out a business, then that keyword search will be captured by one of our softwares, and we'll I'll get the report at night, and then we'll look at it and we'll figure out which of these companies have the potential to re-rate. Now some company may already be well run. It may be trading at let's say 30 times earnings already. Then those are the kind of things which have already well run. Then I'm not looking to get involved in a pre-demerger sense. But companies which may not be run well right now, where the demerger could add value, we'll start to evaluate that immediately.
Amazing, Neel. And is there any resources if someone wants to start special situation investing, anything to read, anything where they can increase their knowledge?
So I would suggest, contrarily to popular belief, that when Warren Buffett is considered to be a proper pure value investor, he is actually the original special situation investor. He never said special situation, didn't mean he didn't do it. He So an investor, if anyone watching this wants to look at this, go to Google or go to ChatGPT and kind of get Buffett's annual letters before he started Berkshire Hathaway. He was a fund manager. It was called Buffett Partnership.
Okay.
Go through all of those letters. That would be the gold mine for anyone looking to do special situations or value investing in general. Post Berkshire Hathaway, while he kept doing something, his language kept changing. He kept saying ETF, mutual funds, this, that. But his letters before that are the ones which investors should focus on. Letters of Buffett Partnership. And then, of course, Joel Greenblatt. Anything that you can get about Joel Greenblatt around the 1990s, his old interviews, or he's written a couple of books. One is on special situations, and there is another book on magic formula investing. Both of them are legendary in terms of what they can teach us. And in terms of resources, Buffett and Joel Greenblatt, and all the books that Joel Greenblatt has written.
Amazing, Neel. You also focus on new age businesses, and I know you have invested in a lot of startups which have done well. Can you walk us through that side? Like, how do you scout for those opportunities, and how do you run those opportunities, ride those trends?
Yeah, so when we were speaking offline, we have two startup funds, which are your category 1 AIFs. They are also known as angel funds. Here we are looking at companies which can be disruptive or they can be early in a particular sector, and we have a long holding period. The fund cycle is 15 years, so we can hold for long periods. So we have done some interesting investments. Some names people may not know, but some names people may know. So something like a Blue Tokai, it's India's second largest coffee chain currently. But when we invested, it was just a good cup of coffee. It was just a very good product. So when we were having it, I told my team that we must invest in it. Let's try and find out. So we reached out to Matt, and it was the COVID time. Companies were looking to raise money to shore up, especially retail-oriented businesses. So as luck would have it, he agreed to let us come on board. We were one of the few early investors of Blue Tokai, and that company has grown into, I think, now India's second largest coffee chain, and we have multiple such things. So we have been very selective in our picks in startup. We want profitable businesses or companies which are nearing profitability. We don't like companies where the revenue may be 25 crores but the loss will be 50 crores. Yes. I don't understand that. We've done business and we've always kind of focused on how much will I make. I have never understood the concept of I'll make money 10 years later or 5 years later, and right now I'm burning investors' capital to get to a scale. It may work, and it has worked in many instances, but everybody needs to understand what they want to achieve in life. Everyone needs to understand what is their playbook. So for me, the playbook is value investing even in new age companies. If I can get at a decent multiple, a profitable or a bootstrap company which can take my money and replicate his initial success or formula, we want to back those kind of startups. So Blue Tokai is one. Burma, we are the only investor there. That company has done fabulous. They're going for an IPO soon. Great founders. Then there's Burger Singh. There's also now India's third largest burger chain. We identified that very early also. Then there is R for Rabbit, doing very good work in the e-commerce space around baby care. Then there is WLDD, which is India's largest meme marketing company, highly profitable business. No one wanted to invest because probably they didn't understand, but when he explained to me, Arihant, who's the founder of WLDD, I thought that I must invest. And that company, so all of these companies today are much larger in size. And I'm happy to look at any sector. But again, I want to do value investing in startups, which is it doesn't make sense what I'm saying, but if you are very selective and qualitative in your work, you can even do value investing in startups.
Amazing. In fact, your Blue Tokai investment, a lot actually happened over coffee.
Yeah.
Yeah.
So there's a lot of risk also involved in startup investing, because in public markets we have a lot of information which is available, but when you're investing in a startup like something like Blue Tokai, right, there are a lot of challenges operationally which can happen. So some startups do well, but what are the risks involved if you're investing in a startup compared to public markets?
Oh, there are a lot more risk in a startup. There is no hiding away from it, and people like us who are facilitating startup investing should not tell our investors that startup investing is not risky, or should not give unrealistic expectations to potential investors, because most of the investors are first time investors. Yes. At least in India, even now. This culture really just started after COVID, startup investing. A lot of people took their first investment post COVID. So I was very clear that we have to do it ethically, and so the risk is manifold. There are many risks.
Yes.
And of course we are still ready to take the risk because the payoffs are also equally high. If you get it right, the payoffs are high.
So when you talk about the payoffs, like for example, what could be an ideal payoff? Like what has been your best payoff? Like 1:10, 1:20?
So first I'll cover the risk.
Yes.
So the risk would be illiquidity. A startup may remain unlisted for 5 years, 7 years, 8, 10 years. Whatever investor needs money in the meanwhile.
Yes.
So anybody who wants to invest in startups must know that this money is not something that I'll have to call on, that I needed back for any kind of. So startup money is really for someone who decided, I'm happy to lose this money, right? Of course, you have to do a lot of work, but you have to come with that mindset that, okay, I can lose this money. So then ideally, how much money are you willing to lose? So it has to be, let's say, 5 to 10% of your overall corpus.
Okay.
That must be earmark for startup. You should not go more than 10% in startup. Maybe 15%, maybe 20% if you are very risk. You're happy with risk, then 20%. But still, even if you're a young guy ready to take risk, not more than 20% of your portfolio. So this is the risk. Illiquidity is the biggest risk. Corporate governance is another risk.
Yes.
A lot of times startups just fudging numbers. Before they go for a fundraise, they will just increase the marketing spend. Revenues go up, but there's no profitability.
Yes.
There is no cash flow. There's just a burn. So multiple risks around due diligence. So startup investing, if you've not done the due diligence, forget about it. Don't do it. A lot of due diligence has to go into doing startup investing, which you should do it via a fund. Any HNI decides to do startup investing, or a retail investor, you're going to lose money more likely than not, because you will not know how and when these numbers have been presented to in such a way that it look good. They're not actually that good. So these are the risks. There are a few risks. So ideally, anybody looking to do startup investing should do in a fund, and an environment of a fund where some due diligence has happened, high level due diligence. You can still lose money, but at least do the due diligence. Yes, that. And in terms of payoffs, so after we talk about risk and that it being very risky, you could have some brilliant payoffs. You have already big names that are something like Google, Amazon, all of these guys in the US, massive payoffs.
Yes.
Massive.
Asymmetric payoffs.
Yeah. So that is what we are. So now we being a 4 trillion economy, if we get to, the US is now 30 trillion, right? So if we someday get to 30, so most of the companies, not most, some of the companies that you get to invest today as a startup could be the giants in the next 10 years or 15 years. So the payoffs could be, there's no point saying this on screen because, I may say 1000x, but, we all dream of it.
Yes.
For me, we, in our fund, we started about 3 years ago. All of these companies have gone on to, not all, at least most of them have gone on to raise money at a much higher valuation. We've done one exit also. So far so good, but I'll not say anything unless we actually, it's all on paper, the valuations have gone up. But when I exit a bunch of positions, then maybe in a couple of years, maybe 3-4 years down the line, we should have one more chat around that. But touch wood, so far they're all done good. And the payoffs can be fantastic, but also people need to be very mindful of risk. As I said in the beginning of the interview, everyone needs to know what they're doing. You need to understand very deeply as to what you're doing. Unfortunately, in this industry, mis-selling is rampant. People just want to make a sale. So mis-selling is rampant, but if you can ethically do a product, if you can ethically run a fund, then clients will be happy also.
Amazing, Neel. And like we are talking about startups, and Shark Tank is picking up. A lot of people are interested in startup investing. But as you said, everyone cannot get access. If I want to invest in, suppose, a blue token, I cannot directly put up that fund.
Yeah.
Suppose if someone's interested in investing in a startup, like how do you facilitate that? What is the minimum amount required? Like if I want to invest in only startups.
Oh, there are multiple ways of doing it. There are SEBI registered products. So there is, typically startup investing can happen via 3 formats. Typically, there are more, but typically, if you want to come in a fund structure, there is a category 1 AIF, category 2 AIF, and category 3 AIF. Category 1 is where most of the angel fund kind of investments happen, where SEBI and government have defined what's a startup. So let's say a company less than 10 years old, company with revenue less than 100 crores. They should not have a group turnover more than 300 crores, and they should not have any subsidiaries or joint ventures. So that's defined as a startup. So going through a Cat 1 AIF would be a best structure. Cat 2 AIFs, category 2 AIFs are typically your venture capital funds or a private equity fund. Now that is different from a startup.
Yes.
That's like, let's call it investments which are 1, 2, 3 or 4 years before IPO.
Okay.
Your end goal, exit via IPO or some sort of an M&A. But when you're doing startup, you're not thinking IPO, you're not thinking M&A. You're just thinking that let's scale up a bit. So category 1 AIF would be the best way of investing in startups. So let's say our 2 funds, They are angel funds. So investors have to commit to investing 25 lakhs over 5 years. They need to have certain qualification, which we do a KYC before we onboard any client. The investor has to have qualification because it's risky, right? So SEBI is also very mindful, and rightly so, that you cannot just let anyone who doesn't understand it do it. So someone which has a 10-year track record, or else should have into a job at least for 10 years, or must have a certain income, only they are allowed to invest in startups. So yes, but still doing it in a fund structure is far more safer than to do it on your own, because there are so many investment bankers there are these secondary websites where you can go and pick up any share. I think that is risky, very very risky.
So you're saying that KYC happens of the client. Is it a mandate by the SEBI, or
Yes.
like Negen specifically does it?
No. We also do it, but it is a regulatory requirement that 2 crores net worth is needed for a client who wants to do startup investing. So SEBI has also devised things properly, right? So they want to protect the investor. So I agree with all the necessary KYC checks that the regulator has asked us to do, and it's necessary and it's good.
Neel, off topic, like we were chatting that in December, I think last year, you said that markets look expensive, and you were talking about that markets did correct a lot after that. Now earning seasons have come, earnings are still better than what they were expected. What's your take on these earnings? What do you think? What's your outlook on the market?
Yes, thankfully again we got the timing correct. So in our PMS and also in our AIF, we increased the cash quotient, so that when the drawdown did happen, we did not end up getting a similar kind of a drawdown in our funds. And then when the markets corrected, we started buying again. So now in both the funds, we are almost fully invested. What do I think about the market now? After we've recovered, quite a bit of the fall has been recovered. But what do I think now? I don't have the faintest clue as to what will happen in the next 3 years, 3 months, 6 months, 12 months. I don't know. What I do know is that we have to find bottoms up ideas. My goal and objective is to find bargains. I start with that premise. And if I find a bargain or a bunch of bargains where I am getting those companies below the peer group valuation to begin with, that's at least the first check. And then you do more due diligence into it. But if you are able to do that, or if you are able to get, let's say if I'm getting a monopolistic business, if I'm a proper value investor tomorrow, and if I'm getting an airport business, or if I'm getting something like a exchange where it's not easy for you and me to come and compete with them, and I know next many years the industry will grow, this guy is the monopoly over here, so he will grow, and nobody can just come and compete with them, then I am less worried about the stock market. I think a lot of people start about asking stock market and ask where are you going to invest second, but we have to identify who are we. Are you a trader, investor, long-term investor, whatever it is, define it first. And once you've defined it, then for a long-term investor, the question about what the market may do is irrelevant. If the markets do good, bonus for us. If the market doesn't do good, we unfortunately have no option but to be patient. We be patient, and if you have great businesses in your portfolio, or if you made whatever you're doing, you know what you're doing, then what market is doing is not very relevant.
So don't look at short-term fluctuations. And you also mentioned that we are progressing toward a 5 trillion economy. Any specific sectors you think could do well in the years from, not names, but sectors you think are on your radar?
Because of the recent conflict that happened, or almost a war, we can call it a war. Because of these recent events, defense becomes a no-brainer. I mean, you don't need to be a very knowledgeable person to tell that defense spending is going to go up. Now, defense is a no-brainer. Now, when you say defense, there are so many subsectors in a sector like defense. So, around IP, companies that have IP. So, every time you can define a sector, but even in a sector, if there is no IP, if there is no moat, then everyone can do it,
Yes.
and then that's no fun. Now, if I can tell you that the UK India FTA happened,
Yes.
and I'm going to tell you that textiles are going to do good, and everyone in market is very bullish on textile, but come on, it's not that somebody else cannot do what somebody is doing in textile. Anyone can do it. With scale, it becomes very difficult. I'm not saying that it's not difficult, it's very difficult, but it's not like supplying an engine to Boeing or making a Boeing engine.
Yes.
Boeing engine, no one can do it, even if they want to do it and they spend whatever money they want to spend. It's not about the money, it's about the reliability.
Yes.
It's not the same making a jeans or a shirt or something like that. So, top down, I can tell you defense. Top down, I can tell you textiles probably will do good. Top down, I can tell you our industry, wealth management or asset
Yes.
management, financial services, where you're talking about fee-based income. And also, when I talk about financial services, I'm talking about wealth managers, asset managers, let's say the custodians, some even the infrastructure providers, the exchanges. I'm certain in my mind that all of these companies in the next 10, 15, 20 years, as the GDP,
Yes.
as the economy goes to 5 trillion and beyond many years in the future, that these companies will almost certainly do well. The size of some of these businesses will be far bigger than what they are right now. So, and not a lot of these things. So, while in textile it could be replicable, let's say the airline industry, I'll give an example. Historically, airline travel has boomed, right?
Yes.
From 30 years ago to where we've reached today, the number of airports in the world, the number of people traveling in the world, but have airlines made money? No, because some have, very few people have, but on the whole they haven't, because it's very easy to set up an airline. You need money, capital, and anyone can do it and do a bad job at that, and you can lose money. So I would stay away from easy to do or easy to replicate kind of businesses. I would stick to businesses which have certain difficulties for someone else to come and do it.
So basically, look for a moat and basic
Looking
business.
for a moat is, I think, the most important thing. Of course, with moat comes cash flow, return on capital, all those things, but moat is a good starting point.
And Neil, I've often heard you saying concentration over diversification, right?
Yeah.
So you believe in concentrated bets that can do well. So how do you manage your risk while being concentrated?
So there was a mathematical formula someone invented. I think it was Greenblatt. He got the idea from Buffett, where they put it on paper mathematically. At what point have we eliminated the non-market risk?
Yes.
Non-market risk is, let's say you have a two stock portfolio. What if something random happens to the founder of one company, and then suddenly your 50% is exposed to non-market
Yes.
risk, right? So they did a calculation. They said, what if we go from 2 to 4, or 4 companies to 8 companies, and 8 to 16? So as per their calculation, when they reach 16 companies, the non-market risk reduced by 96%. Any further addition to your portfolio beyond 16
16 companies.
is not really reducing risk anymore. Now you're killing your alpha, potential alpha. And if you think you need more than 16 companies in a portfolio, that means you're also not doing effective work around understanding a business. So 16 is that ideal number where mathematically proven that you have, it is that number which is the most sweet spot, sweet 16, you can call it. Yeah, so 16 is where you eliminated non-market risk effectively.
So an investor should ideally not have more than 15, 16 stock in his own portfolio.
Let's say 20. Yeah.
Okay. And like lot is happening in the AI space as well, right? And so I want your take. What is the role of AI in wealth management? We know, as you mentioned, that in the future, wealth management companies will be doing much better. So what do you think with Chat GPT and all the AI boom? What is the role of AI in wealth management specifically?
I think AI today is primitive. Is very, very primitive, and although I'm not an expert at it, being an investor long enough, you kind of get a sense of where and how fast technology is moving. I think 10 years, 15 years down the line, you'll be looking at this AI, whatever we are doing around Chat GPT, and whatever we think are the great things of today will become the VCRs of tomorrow. I think a lot of disruption will happen. I mean, unimaginable disruptions. You could probably not even need education, because you will probably have AI inbuilt in your brain in some way, where let's say we're having a discussion and I want to talk in Spanish, it'll translate I'm talking in Spanish to you. So today if I'm talking these things, people will think I'm a lunatic. And they'll think, what is wrong with this guy? But he's seen too much of Black Mirror and stuff like that. But I honestly think this is all going to happen. It's all going to happen, and disruption to that scale of what we cannot imagine. So I don't know what will happen in the wealth management space. I don't know what will happen in the world. As a responsible investor, we have to be in monopolies. I keep saying that, as much as possible, own an airport, right? क्या disruption, क्या ही disruption होगा? Own something like an exchange, have a supplier to a Boeing engine manufacturer, or do such investments where, if you're not a full-time investor, have a portfolio of stocks, ideally 20 such stocks, where you don't need to go through every quarter as to what changes have happened, how are you getting disrupted, or it'll just be in a fund kind of a structure. But huge amounts of disruptions coming, I'm certain of it, in every space.
That's a great take. Neil, now you mentioned that every investor should look at good compounders. Can you tell me like top three things they should look in a compounder, like any compounder over the last years? What are top three things which you would look in a compounder other than the monopolistic business?
So we've spoken about it, so I'll not touch it. Like having some sort of a moat, whether it's a monopolistic kind of a geographical moat or IP-driven moat. If we kind of skip that part, what else? So return on capital is very important when we want to make a great investment. Wow. So return on capital. So if you have a high return on capital, typically these companies will have no debt.
Yes.
Why? Because whatever is being invested in the business, a large part of it is coming back every year, and whatever is coming back on top of that is being reinvested at similar kind of rates. In reinvestment is happening at the same rates also. Those kind of businesses will create wealth for you if you bought them at a good price. So there are so many things. There is no such right or wrong answer. If there was a simple formula, we would have a lot of people far better off today. But if I would kind of want to say how someone should do an investment, the special situation is very specialized, forget about it. There is something called a magic formula. I would say people should look at that. So, okay, forget even the moats and the monopolistic natures. If you want to be primitive about it and say, okay, something that anyone can do, you could just go on something like a screener and say, okay, let's find out a combined ranking of companies which have the highest return on capital and a combined ranking of the lowest valuation businesses, let's say EV to EBIT, or let's say earnings yield of a company, and then make a common ranking. It's not necessary that a business with 50% return on capital is the best business. A 30% return on capital married with a low valuation could be a better business, better stock. So a magic formula approach, again, with Joel Greenblatt has spoken about it. There is a book about it. I think the little book that beats the market. That's a great resource for someone to just go through it. A nice weekend read, simple to understand, nothing fancy. All it requires is understanding patience, and just after that, compounding. So when we speak about what makes a great investment, all these factors make a great investment. But before we talk about what's a great investment, it's very important to understand who we are. Now, if you think that you are a long-term investor, more important than all these things, moat and stuff like that, is compounding. भले आपका पैसा 8% में कंपाउंड हो, 12, 15, 18, 20, 26, अगर आप ग्रेट इन्वेस्टर हो 26, 30 कर दिया आपने फॉर अ फ्यू ईयर्स, ग्रेट, गुड लक, बट कंपाउंड करना है. और मैं किसी को बोल रहा था रिसेंटली कि यार इन्वेस्टिंग ना एक रिच आदमी का काम हो गया है. बिकॉज मैंने क्या नोटिस किया, बिकॉज मैं काफ़ी टाइम से इन्वेस्ट इन स्टॉक मार्केट में रहा हूँ एंड मैं देखता हूँ लोगों को 30 साल 40 साल मार्केट में है बट उन्होंने कुछ ज़्यादा वेल्थ क्रिएट नहीं किया है. क्यों? क्वेश्चन इफ आई आस्क माई सेल्फ क्यों? बिकॉज फॉर अ मिडिल इनकम पर्सन they don't understand or they have not been taught the concept of compounding, the effectiveness of compounding. तो जब भी खर्चा आता है, whether it is बच्चों की स्कूल की फीस या नया घर खरीदना, नई गाड़ी, वेकेशन, कैन यू इमेजिन लोग वेकेशन के लिए पोर्टफोलियो तोड़ते हैं. वेकेशन जाना है, पोर्टफोलियो से रिडम्पशन लेना है. तो बेसिकली क्या है ना कि the people who are around middle income bracket, if only we start teaching this compounding ka benefit in school, India would be far more prosperous. We can even do it now. But point is कि खर्चों के लिए पोर्टफोलियो सबसे पहले अटैक करते हैं. नहीं कर सकते. सॉरी, नॉट पॉसिबल. योर पोर्टफोलियो मस्ट कंपाउंड बिफोर यू इवन थिंक of what you want to buy, which fund, which mutual fund, whatever, come with a mindset कि 20 साल पोर्टफोलियो टच नहीं करना है. चाहे इधर से उधर हो जाए दुनिया, पर्सनली या जियोपॉलिटिकली, मैं अपने पोर्टफोलियो को टच भी नहीं करूँगा. दैट शुड बी योर स्टार्टिंग पॉइंट. उसके बाद भले 8% पे कंपाउंड करो. यू बी द वर्स्ट इन्वेस्टर इन द वर्ल्ड. बट इफ़ यू आर पेशेंट, आप जो कमाल देखोगे ना अपने पोर्टफोलियो में, कमाल हो जाएगा 20, 25, 30 साल के बाद. आपके बच्चे बोलेंगे कि यार बॉस, डैड, मॉम, यू आर ग्रेट, यू नो आपने मेरे लिए इतना कुछ किया है. एंड बट नो वन अंडरस्टैंड्स इट. इफ देयर इज अ कंप्लीट फाइनेंशियल illiteracy around the whole point of compounding. People are just इंटरेस्ट रेट 25 पैसा ऊपर गया, 10 पैसा नीचे आया, 10-year रेट, 20-year रेट, ओके, इज़ ऑल इम्पॉर्टेंट. बट हैव यू इवन अंडरस्टूड कि आपको कंपाउंड करना है पैसा? सो येस, सो आई थिंक देयर शुड बी अ लॉट ऑफ टीचिंग टू योर चिल्ड्रन अबाउट द होल पॉइंट ऑफ कंपाउंडिंग. मैं देखता हूँ इनहेरिटेंस में भी इट्स अनदर गुड फैक्टर. इनहेरिटेंस, कभी बच्चे लोगों को पेरेंट्स के पोर्टफोलियो हाथ में मिलते, पूरा माल लिक्विडेट हो जाता है इमीडिएटली. क्यों? अरे मुझे नया घर खरीदना है, मेरे खर्चे है, ये वो है. हमारा जो इकोनॉमी जो है 4 ट्रिलियन पे आया है, सेंसेक्स 100 से 40,000 गया. रिच कौन हुआ है? खाली रिच हैव बिकम रिचर एंड सर्टेन पीपल इन मिडिल इनकम ब्रैकेट हैव बिकम रिचर, बट द होल पॉपुलेशन दे हैव just not understood the concept of compounding.
That's why they say compounding is the 8th wonder of the world.
It literally is. And when we say it's the 8th wonder of the world, we kind of just shrug it. You know, it's a funny thing I just said, it's the 8th wonder of the world. It has to be taught. It has to be put in. You just have to force feed a child when they are little that compounding के बारे में सीखो. And whether, you know, even if a child is, you cannot explain to them stock market and all. You can teach them about compounding, like compounding effort. Like आप फुटबॉल ट्रेनिंग कर रहे हो, क्रिकेट ट्रेनिंग कर रहे हो, तो यू कैन एक्सप्लेन टू देम इन अ वे कि यार आप धीरे धीरे प्रैक्टिस करोगे तो ही बेटर होगे. आपका प्रैक्टिस कंपाउंड हो रहा है ताकि आप बड़े प्लेयर बन सको. बट ये जो नॉलेज होगा ना, इवन इफ ही फेल्स एज अ क्रिकेटर और फेल्स एज अ फुटबॉलर, he'll never fail in life because his portfolio, if a child starts at 12-13 a portfolio, he doesn't touch it till the age of 50, वो करियर में पूरा का पूरा फेल भी हो जाए ना, he'll be a big winner in life. He'll be ahead of everyone else in his peer group.
You made a very great point that most of the middle income have not been able to improve their quality of living because थोड़ा भी short term fluctuations, they are thinking too short term and exit कर. But suppose someone who's watching this podcast wants to start, like he may be suppose 25-30, he's making decent income, wants to invest for the long term. How should he approach, like basically if suppose because people abhi government is also pushing mutual fund sahi hai. Suppose someone wants to start his journey, if he goes through mutual fund, what should be, like how much should he invest? Like suppose he's making 1 lakh a month, how much should he invest? Which funds should, like not exactly named, but what should be his process?
तो मैं वही बोल रहा हूँ, विच फंड्स, व्हाट प्रोसेस, वो तो चलो, वो तो बाद में वो आता है. वो आपका इन्वेस्टमेंट आपको 14% कमाना है या 18% कमाना है, वो तो छोटी बात है, बाद की बात है. पहले तो सबसे पहला काम, if you are 30 right now, if the listener is 30, let's hypothetically, and he wants to start, or if he is 35-40, ideally 40, if you are 40 and you kind of figuring out what should I do, how do I do it. सबसे पहले तो भूल जाओ पोर्टफोलियो को, सबसे पहले बच्चों के साथ बैठो और बच्चों को समझाओ कि बॉस आई एम स्टार्टिंग दिस एंड इफ समथिंग वे टू हैपन टू मी डू नॉट लिक्विडेट दिस पोर्टफोलियो. एंड उनको ऑल्सो समझाओ कि what is compounding, and you don't have to be a superstar, you don't have to make 40% a year. म्यूचुअल फंड में डाल दो और निकालो मत. अगर 2 साल अच्छे नहीं किए और टीवी में कोई बोल रहा है कि अरे ख़त्म हो गया, ये प्रॉब्लम है, वो प्रॉब्लम है, उनको बोलो कि टीवी बंद कर दो, राइट. पैसे डालो और डालते रहो, SIP करते रहो, म्यूचुअल फंड में करो, खुद के पोर्टफोलियो में करो, PMS में दो, AIF में दो. दैट इज़ नॉट द पॉइंट. पॉइंट इज़ कि कंपाउंडिंग सीखो. सो द एवरेज इन्वेस्टर टुडे हैज़ टू फर्स्ट लर्न हिमसेल्फ अबाउट कंपाउंडिंग. थोड़ा कुछ पढ़ाई करो कंपाउंडिंग के बारे में, रियल इफेक्ट्स ऑफ कंपाउंडिंग, फिर अपने बच्चों को सिखाओ. एंड देन इफ़ यू आर savvy इनफ, इफ़ यू आर अ फुल टाइम इन्वेस्टर, डू इट योरसेल्फ. इफ़ यू आर नॉट, अगर आप जॉब कर रहे हो, आपको डिसाइड करना है कि कैसे करना है, तो कोई भी म्यूचुअल फंड डिस्ट्रीब्यूटर या कोई भी वेल्थ मैनेजर के साथ बैठो. आइडियली 2 लोगों के साथ बैठो ताकि 2 ओपिनियन आप ले सको और देन आप डिसाइड कर पाओ कि सेकंड ओपिनियन या फर्स्ट ओपिनियन में किसके साथ जाऊँ. और उनको बताओ कि मेरे 30-40 साल के गोल्स क्या है, तो वो आपको वेरी सिंपली बैकवर्ड वर्क करके बता देंगे कि आपको क्या करना चाहिए, कितना इन्वेस्ट करना चाहिए ताकि आप ये गोल्स में पहुँचे. बट होता क्या है कि 3 साल में या 4 साल में मार्केट अगर ऊपर चला गया, अरे मेरे पैसे लेके मुझे भागना है, या तो मार्केट टूट गया और बोलेगा अरे मेरा ब्याज में उतना बन जाता. अरे यार ये सब ना, मैं थक गया हूँ, आई एम सिक एंड टायर्ड ऑफ दिस मेंटालिटी, ब्याज में इतना बन जाता है, ये वो. आई एम लाइक कि प्लीज़ गिव मी अ ब्रेक. इन्वेस्टिंग इज़ नॉट योर एक्सेल शीट मॉडल कि हर साल इतना बन जाएगा. इट्स लाइक कि 2 साल कुछ नहीं होगा, 3rd ईयर में शायद पोर्टफोलियो डबल हो जाए, हु नोज. दैट विल बी अ CAGR ऑफ 26%. और 4 साल में शायद डबल हो जाए, 4th ईयर में डबल हो जाए, 18% आ जाएगा. तो it's about understanding the entire goal, which is investing. You have to grow your portfolio on a higher base. That is our entire goal. उसके बाद चलो ठीक है यार, whatever rate of return is fine, वो आपका नसीब. Talk to a wealth manager or do it yourself. That's different. That's a later thing. But if you don't understand compounding, nothing, you will become 40 ka 50, 50 ka 60, 70, and same costs will keep catching up and you will not come out of the quicksand. You want to come out of the quicksand, you have to let your portfolio be. It should be sacred. It should be a temple where no one is allowed to even look at it with a thing कि यहाँ से निकालूंगा मैं, to take care of that marriage or take care of buying a new house. Don't do a trip. Don't do a trip. You make your portfolio for your children.
You make a very valid point, and like it's important कि at least kids start learning about the benefits of compounding. See, a lot of people admire you. They also want to get into fund management. So if someone wants to start, what are the things they should do if they want to start their own PMS or their own AIF?
Now this is getting into difficult territory. Now again, this is not something that, it's not like starting a HR firm or advertising agency कि चलो कर लिया. This is a highly regulated space. So first of all, you need to be having some work experience ideally. So 3-4 years in a buy side kind of a thing. Then you have to approach the regulator to get a license. They also will do a thorough check whether you understand or not. Apart from that, let's say you kind of managed all of that, you have to do something different. You need to figure out something which it is not easily replicable for someone else to do. So while I said, what kind of business you want to invest in, some sort of difficulty for other person to do. Same way in investing, if you are a fund manager, why will anyone select some random fund manager over great legends like a Bharat Shah or big well-known funds are there? Why will anyone select some newcomer? Unless the newcomer can demonstrate track record, or else demonstrate in theory that what he is doing will generate track record. So initially, sometimes you just have to, friends and family are the right way to go. And say कि first 3-4 years, whatever walk-in clients, whatever I'm able to get clients, okay. But 3-4 years will be friends and family money, where I'll try to do a track record. And then if you're able to consistently beat the market, then there are enough clients, because most of the funds find it pretty difficult to beat the market. So something differentiated if you do, then you can create history because we're at 4 trillion. Today in India, forget fund manager, you can become anything you want to become. All you need to do is the right process and the right formula and the will and the ambition to do it, ethically do it. If you do it ethically, the whole country is open for business currently in all fields, in everything. But specifically, so in fund management, you're going to be, it's a game of mental, it's a game of lots of science and art. And a lot of people are doing it since 25-30 years. Some of my seniors are doing for 40-50 years. So आप कैसे compete करोगे?
Yes.
आपको compete करना है तो आपको कुछ अलग करना पड़ेगा कि लोग उनके पास नहीं जाए और आपके पास आए. So for that differentiated approach, leading to knowing to yourself कि 3-4 years forget about becoming some sort of a celebrity or some, wanting. No, 3-4 years focus on the core delivery of your fund where you may be the only investor. Track record बना रहे हो ना. So 3-4 years of gestation period is there, and a lot of cost is there, compliance cost, regulatory cost, operation cost. So it's not for everyone. So you need to be well capitalized to do this business.
Neel, you mentioned that stand out, be different. Now, if I see Nijin has done exceptionally well and you have a very unique approach. In fact, you are one of the top performers in your category.
Yeah.
Now, can you walk us through what funds you are doing, what is unique about each fund, like the startup fund, the PMS?
So PMS is largely, that was the first fund, is almost 8 years old now. That is largely around special situations. We want to somehow find a bargain. And we are now, in our minds, a specialist in figuring out how a corporate event, corporate action can lead to mispriced assets where I can get a bargain. Now I have various mental models in place to do that. So first is the PMS, which is around special
And what is
situations.
the performance of that PMS? CAGR.
We last 5 years I checked, CAGR is of course high because COVID low. 5 years back was the COVID low, so even it's some 46% CAGR, which is double of market. But I mean, it's pointless talking
Yes.
about that CAGR. What is important is the relative outperformance.
Yes.
Relatively, we outperformed by a factor of more than double to the index. And in the multi-cap category, we are ranked, I think, first or second. It doesn't really matter first or
Yes.
second. As long as you're in the top quartile is good. So yes, the PMS has done good, thankfully. Second is we got the startup funding, where we launched 2 startup funds. The idea were to invest in startups, but do value investing in startups. I saw all of these companies are there's no due diligence happening. People are randomly putting money. And in excitement, the person who starts startup investing, in excitement he puts money, but उसका पैसा कभी वापस नहीं आता. And he says कि चल ठीक है यार मुझे whatever I get. So then I thought there is a good opportunity for someone to launch a good startup fund, which is a non-discretionary kind of a fund. So ours is a non-discretionary, whereby we will launch a transaction, but client has to finally decide how much he wants to put and whether he wants to put.
Okay.
So it's a platform. It's a category 1 AIF. It's an angel fund, which is a platform. So agar if I were to launch Blue Tokai or Burma,
So it's up to me if I want to invest.
if you don't like, then you can ignore it.
Okay.
And the next deal is as per what you understand. You can decide whether to invest and how much to invest. So I am telling you this is a good deal, but eventually you have to take that call. So that is the second fund, which is done pretty good. It's a highly regarded fund. It's not good to call your own fund highly regarded fund, but sorry, I don't know why I said that. And the third fund is a category 3 AIF, where we are doing a mix of everything, where we'll be doing pre-IPO investing. We invest in IPOs in form of anchor book investing, and we also invest in the listed security space. So all of these 3 licenses that we have 5 funds in total, 2,300 odd, approximately 2,400 crores is the AUM.
Amazing, Neel. One last question before we move on to the rapid fire. What does your typical day look like? Because as you said, you don't like watching the screen much. But so how do you spend your entire day? How do you scout for basically? I'm sure you're looking for opportunity, but what does your typical day look like?
So 3 times a week, I do the gym, and I try to be regular, but it's not easy. But yeah, as much as possible, I start with exercise. Um, I then the markets start at about 9:15, and you all, no matter who you are in the stock market, 9:15 sabka
Yes.
alarm mental model, looking at that. But we are very relaxed in that term. We are not your trader or momentum. We are value investors. A lot of effort is put while selecting a company.
Yes.
Selecting a company is like, we are all like, do this, do that, figure out. But once you've invested, life is simpler for a value investor till the time you want to
Yes.
rebalance. So typically then, till 3:30, you are looking at your portfolio, valuation analysis, you're talking to your team, meeting clients, meeting companies, the usual what a fund manager would do. And then evening, my kids, my wife, my family. So I take a keen interest in my children. So we've decided not to keep any nanny. So me and my wife do it without a nanny, and it's really sometimes you have to pull your hair. But again, you need to know what you want to do. So we
Yes.
decided no nannies because we want to be shaping up their view. So I talk about investing, I talk about all kinds of stuff. My wife does. I take them football training. So right now also, after this podcast, I take my son. He has a football tournament, so I take him there. And then recently, very recently, I've started looking into my diet choices also. Intermittent fasting, I learned more and more about it, and I've been very intrigued how the body's cells start to repair themselves
Yes.
after a 12-hour fast. So when you go to 13th, 14th hour, there's some term called uh, apophagy or something like that. So where the cells eat themselves. So all the bad cells are destroyed and new cells are formed. So yeah, so I'm looking at healthy routine also. Yeah. One thing I need to work on is sleep more, because when you're in this space, you're already all the time thinking. I've also deleted social media from so I deleted the YouTube app, Instagram, Facebook, all deleted. I must soon delete Twitter also.
So basically, like have a balanced work and life balance. And Neil, you also mentioned that you're not on social media, right? What is one reason of not being on social media?
No, so I was on Twitter, which I completely come to a grinding halt. But everything else I've deleted from my phone. Uh, the reason is because I realized to myself like an idiot. I'm just scrolling and I'm spending. Next thing I know, it's 1 o'clock in the night. I'm
Yes.
watching videos aimlessly. I said this is not the way. Uh, and when I'm doing that, I'm feeling hungry also. My
Yes.
brain wants that sugar in the body, so I'm eating something. It's just wrong. It's just wrong end to end. So I thought the first thing to do, identified the problem and I cut it
Yes.
out. And my body is going through the withdrawal symptoms right now. But after a few days, it's getting easier and easier.
So I totally agree. Like people mindlessly spend hours on Instagram watching reels, and like we don't even know when our time goes.
Yeah, yeah,
Uh,
scary.
Thank you, Neil, for answering all the questions. I'll just answer, like, ask you few rapid fire questions, and you have to answer them very quickly.
Rapid fire is dangerous for a fund manager. कुछ बोल दूंगा फिर पता चले कि problem हो गया.
No, no, don't
So
worry.
don't ask anything about stocks.
Yes, yes. Uh, Neil, one book which you would recommend to any investor who start in the market.
The Little Book That Beats the Market from Joel Greenblatt.
Your favorite stock market movie.
Wall Street Original, Michael Douglas wala.
Okay. One advice for retail investor other than the compounding aspect you mentioned.
Don't do it yourself. Invest for long periods through some sort of a fund structure.
It's a great advice. If you could have unlimited supply of one thing, what would it be?
Oh, uh, uh, there are three things in my life I like, but if I have to say pick only one, then only my family, nothing else. I would not need money if I have my family. But yeah, you typically want good health, family, and wealth. These are three things I keep
Yes,
thinking about. So, but if I have to pick one, family.
that's a great answer. Uh, like basically your journey has been phenomenal. But who inspires you the most?
My mom and dad, beyond any, my mom for teaching about being truthful, Dad is a role model. He's in PR.
Yes.
He's considered to be the gatekeeper of PR in India. So that is a role model, and for us as children, the difficult shadow to follow. But mom and dad, my brother was very. His name is Gautam. He's been very instrumental in teaching me about special situation. Younger brother, but he taught me, and my life kind of turned completely once I got to know about that. My wife, my children, my wife Mansi has completely transformed my life in many ways. I met her long ago in college, so we are still together, luckily. And my two children, um, nothing apart from that.
Amazing, yeah. You're a very family oriented guy, which is something which I admire. You're not only focusing on money but also focusing on relationships. Thank you, Neel, for sharing all the insights. It was fun talking to you. You shared a lot of insights. You broke a lot of myths. Thank you for giving us your time.
Thank you so much. It was a pleasure as always.